Hello and welcome to MasterChartsTrading.com market recap for Friday, July 10th, 2015. This week was quite volatile, but I think by the end of the week, S&P 500 did hold support and went in our buy signal. QQQ I think is not far behind, but it's lagging slightly the S&P 500. And small caps, I think one of the better places to be right now is small caps because they're ready for a new highs. We'll look at one ETF that caught my attention. It's called Hack, which has a lot of cybersecurity companies in it. Also might be ready for a new high. Now TLT, the bonds, gave back most of the gains for the week, and they're pretty much back to critical support. We'll look at gold and gold miners as they have another pretty bad week, and we'll look at Chinese markets as they exhibited pretty amazing volatility. Oil broke support and might be headed lower. Alright, so let's look at the S&P 500. So this is a chart as S&P 500 large cap index right here. So first of all, this is a bullish chart, long-term bullish chart. So I'll be looking for long opportunities or buying opportunities within this chart. I will not be selling this chart or going short. So first, we had this really big candle, I think, last week, and we broke first support. We clearly broke it. We closed below this low of 2072 right here, and we had a what's called a rising wedge or possibly a flag. So this could be like a significant drop, and then this is like a rising wedge. And then on Wednesday, we had a pretty nasty drop and a close below the 200-day moving average, which is this dotted line, the green dotted line. So one can say that this was a bear flag break, and it resolved to the downside. So if this was confirmed, this would call for prices to drop somewhere in the vicinity of 1980 possibly. This obviously did not happen. So on Thursday we held support, I think, and we tried to rebound, but we failed. And then Friday we had a very strong candle, I thought. It was a strong from the beginning to the end. Basically, we closed near the highs, and the gain was over 1.2%. So this was a definitely a good day on Friday. I think more importantly was the fact that we went on a breadth thrust. Going by Breadth Momentum Oscillator, the Breadth Momentum Oscillator went above its 10-day moving average right here, this line right here, and closed above it. So this means that most of the stocks are now moving to the upside within the index, and that's a good sign. Let me just refresh the screen and see if I get a new value for new highs, new lows. So new highs, new lows indicator still we had more new highs, more new lows for the past couple of weeks, but we didn't really get that many new lows because you can see that it stayed above the negative 5%. We're getting some new highs now. 1.2% of the S&P 500 are getting new highs now. Excuse me. As far as divergences, so I think we basically worked them off because you can see that we came down as low as 2044, and this close was basically at this level. So it's kind of like a flat S&P 500 and slightly declining breadth measures of the market. Now, I think we pretty much worked them off by making a basically like a low. It's almost a lower low, not quite, but maybe we'll get another lower low. But I somehow doubt it. I think we may have turned the corner and we may be headed higher. So these divergences, while they're still present, I think may have already worked off. Now, let's go look at QQQ, Nasdaq 100 ETF. So here, it's a little bit different because you can see the low here, and the low here is still slightly higher, and we can still see the advanced decline line trending lower, and especially the volume, the on balance volume is still trending lower. So QQQ is a weaker chart based on the internals of the chart as well, and you can see that we still did not get a breadth thrust by on the breadth momentum oscillator going above its 10-day moving average. And also here you can see the in late June we actually got new lows more than 5% for 2 days in a row here, and we have not gotten them above the plus 5%. So I think this internals of this chart are a little bit weaker than that of S&P 500. But nevertheless, I think once S&P 500 moves, I think QQQ will follow, and hopefully it will follow on higher volume. We'll see at this point. I can't say. And then looking at IWM, the Russell 2000 iShares. So overall, this is a stronger chart than both of the previous ones, both of the S&P 500 and the QQQ. You can see that the first support in the 122 area really didn't break down. I mean, we had a close basically at 121.99. So but yeah, you have a close here. You have a low here as 122. But for all practical purposes, I think this is a support that was held, because this is a ETF, exchange rate fund. It's composed of 2,000 stocks. So I cannot say 100% that I exceeded the low here and the close below by 1 penny, and then this means I broke support. I think we held support here. Plus we had this big hammer like candlestick and tail and the sell and the buying tails out the bottoms here. So overall, I think we held support for Russell 2000. And also on this chart, there were no divergences. We were making higher highs for an advanced decline line, and the unbalanced volume was pushing higher as well. So on this chart, basically there were no divergences, and whereas S&P 500 came down as far as the 200-day moving average, Russell 2000 is not even nowhere close to it yet. So we're still yet to get a breadth thrust on the IWM, but I think we will. Well, if S&P 500 got it, then we will most likely follow with a breadth thrust for IWM as well. And here it almost, the new highs, new lows indicator almost got to minus 5%, but it's kind of hard to see, but it didn't get there. It's like 4 point some percent. So I still think that, let me do a refresh, by the way. I still think I have July 9th data. So yes, we're already getting positive. So we're getting new highs already. So I think of all the three major indices, the QQQ, S&P 500, and IWM, I think IWM, the small cap universe, is positioned kind of like one of the better places to be for a strong gain and possibly new all-time highs as well. So next chart, I'm showing IWO, the Russell 2000 Growth Index ETF, and this is an even stronger chart than the IWM. You can see that this SCTR rank, the Stock Charts Technical rank, was above 90 for a very long time. Let me just go back to IWM and I'll show you. See, you can see that SCTR is not as strong. I mean, it's definitely a very strong chart, but IWO is even stronger because it's a growth oriented stock. So today was a buy signal for us. We did re-enter the market right here as well. I think we're going to push higher to new highs for IWO as well. Another one of the high beta sectors, high volatility, high beta sectors is HACK, which is a cybersecurity ETF. It's relatively new ETF, but you can see it's pretty popular. It already got nice volume, 1.1 million shares traded. Also, a very strong chart, at the very least since May. You can see that SCTR, the structure technical rank, relatively speaking, was, in other words, a relative rank against other ETFs is pretty strong. And it did hit an all-time high here in June and then pulled back rather sharply. So you notice that this sharp pullback did not really affect how much, how high the technical rank was. In other words, even though this was a sharp pullback, this security still remains firmly in a strong bull market. So for me, this was a opportunity to look for a re-entry on the long side, and you can see that MACD indicator dropped below 0, so this indicated to me that this security was already oversold, and also it dropped below the 50-day moving, well, actually dropped below the 20-day moving average, but then it also dropped below the 50-day moving average. So it was oversold on multiple indicators. This means that I was looking for a re-entry opportunity. You can see here, this is a long tail out the bottom. This is a kind of like a hammer candlestick. Next day we had a hollow red candle, and also a good indicator that even though they gapped down in the morning, in the afternoon prices were pushed higher, and then next day we gapped up right there as well. So overall, I think this is a bullish chart, constructive chart, and I think we'll push higher to new highs as well. Now, of course, everything can get unraveled, especially over this weekend. We're having lots of Brexit talks with European powers talking in Europe. So moving right along to TLT, the 20+ year Treasury bond fund, you can see that in the beginning of the week here, Monday, Monday, Tuesday, Wednesday, nice gains here during first 3 days of the week, and then next Thursday we had a gap down and continued lower, gap down, and then on Friday was a rather indecisive but somewhat bearish candlestick. So we're basically again at critical support. TLT is just, bonds are just having trouble, even in the face of this pretty nasty crisis that's going on in Europe. They're just having trouble rebounding. So we're back at critical support. I think if this support gives at 114.64, I will be very much ready to call TLT a bearish security. For now, I think it is still just barely bullish. But since these are kind of like a safe haven asset, you know, bonds are demanded in times of crisis. And I think that if Greek thing unravels over the weekend, I think we may see a pop in the bond prices. However, alternatively, if there will be a resolution on the Greek crisis, we may actually see a gap down on Monday below this support, in which case this is not a good sign for bonds. All right, next let's look at gold. So gold daily end of day chart, clearly a bearish security. Prices are moving from the upper left to the lower right. This green line is a 200-day moving average, and this red line is a 50-day moving average. You can see the 50 days below the 200-day. So this week, the important feature of this chart is this big red candle right there. This is a rather bearish looking candle. The important thing is that it closed below this May 1st support at 1168 and this June support at 1162. So it basically broke both supports on one big fall right there. So we're already pretty close to this March lows, and let me just zoom out a little bit to, let's say, 11 months or so, and see how close we are to new 52-week lows. So we're not that close to 52-week lows, but however, if we break this support at 1141, a retest of November lows is almost a guarantee. At the very least, we will see a retest. I don't know if we'll break those lows, but if we break these lows from March, it's definitely not a good sign. For now, we're tracing out, I think, what's a bearish, like a rising wedge. It was a big decline, a rebound. And if we break this if we break this wedge, then we are headed towards at least March lows and possibly even lower. Now let's look at GDX, gold miners ETF. Now, if you look at this chart, you can see already a lot of red, and there is a reason for that, is because this is also a very much bearish security. Now, you can you hear a lot of talk from gold permabulls about how, one of those days the gold will rebound and it will be the mother of all bounces, and we'll go through the moon. Now, I'm sure it will happen one day. However, for the past however many years, this has been a bear market for gold and gold miners. And bear markets are characterized by lower lows and lower highs and lower lows. So it looks like we're just put in a lower low by breaking below the March support right here. And let's just go back to gold chart. And March low has not been yet broken for gold, but let me go back to now GDX. We already broke support, close below support from March. Not a good sign either. So now this support that was broken here will act as resistance. So now we have resistance here in the 1725 area. Anyway, so our short signal was back here on the, let me see, what is it, 17th of May, I believe. So this was extremely productive short signal. This is about 16%, and we're playing it via inverse ETF called Dust. So that's about a little bit over 50%, actually, right? 50% profit. So lots of wedge breaks, wedge break, wedge, and then there was an inside day on July, just the beginning of this month, which clearly resolved to the downside. In fact, weird part is you can see here this is an inside day, so this candlestick, the white one, is inside this red candlestick's range. The next day, it actually went up, and the range was broken to the upside. But that was it. Then the next day it just gapped down and continued lower. So what I'm trying to say here is I don't try to look for a bottom in a bearish security. One day there will be a bottom, and there will be a strong rally, a pullback, and that pullback will hold and support, and it will continue higher from that support. But it has not happened yet. So far, all of the rallies, or most of the rallies, have been shorted. So here and here it was shorted. So let me zoom out as again. One couple more things is, since we have market breadth data for gold miners, actually, let me refresh the screen. Maybe I get some new values for GDX. So yes, we have new values here, and we are at new lows for advanced decline line. We're at new lows for advanced decline volume line. I think this is a new low as well for unbalanced volume. I do believe that is so, yes. And then bullish percent index is firmly in the bearish territory. The new highs, or the new lows, outnumber new highs by 20%. So you can see that this index is pushing lower and lower. So let me zoom out to 11 months, maybe 12 months or so, and see where we're at long term. Oh, gosh, it's covering up. Let me open a new. Well, it's okay. Anyway, so let me just zoom out a little bit less, maybe nine months. Okay, that's a little better. So anyway, so we're here at 1650 something. This is a previous 52-week low at 16.134. We're very close to it. You can see that here today on Friday we closed at 1675. We actually closed below this December low. So this December low at 1696. So we had broken supports from March and from December lows. So we are in the process of testing 52-week lows. We're very close to them. This is quite bearish. And once again, this move to the downside is certainly, it may not even be so overextended yet, because you can see the MACD here, it bottomed out at like point right here, but this MACD is not that oversold yet. Actually, it was even more oversold back here or here. So it looks like we're not that oversold. We could potentially continue lower. And I'm keeping this position still open for GDX on the short side. So let's look at Chinese market. So this is AHSR. So these are mainland Shanghai shares. So first of all, this was definitely a market leader. You can see the stock chart technical rank was above 90 for a very long time. We had a couple of really good buy signals right here back in February and March. Nice, close below the 50-day moving average. MACD is negative, and then a bounce higher. So this was just a tremendous signal right there. So let me just do this rollover. So you can see that we topped out right here on June 12th, and then since then we dropped. Let me see how much we dropped. We dropped 30, almost 39%. And then this was about, I think this was like 17 trading sessions. And then in just the last 3 days, we went from a low to a high with a 29% rise right there. So this is a tremendously volatile stock. Now, the Chinese government is just blatantly manipulating the market, and usually this kind of manipulations don't end well. However, I still think this is a bullish chart. It may no longer be a market leader because you can see SCTR is now below 90, but that doesn't mean it is a bearish chart. And I've seen headlines like, oh my god, the bear market is upon Chinese shares, because this was like a 20% drop, and people say, okay, 20% drop is a that's how much the security needs to drop before it enters the bear market. But this is a volatile security. I mean, it went up like 60% here, so yeah, 20% drop is significant. But is it a bear market? No, I don't think so. We need to see. First of all, I want to see this 50-day moving average go below the 200-day moving average. It's still a long way off, so there still needs to be quite a bit of bearish action before this happens. I don't think Chinese market is in a bear market. It's crazy volatile, but it's not bearish. Anyways, if you can stomach the volatility, I think here may not be such a bad place to get in. I don't really play it that much, but obviously this signal did not work out. You can see the same thing, close below the 50, MACD is negative, a pop, but what happened? Nothing. Actually, a close below the support right there, so that would have been my exit sign right there, and then another collapse down basically. So volatile security, but still bullish. Finally, oil. Let's look at oil, light crude, West Texas Intermediate oil. I've been saying that this is a bearish security for many months, and these red lines are our short signals. One of them worked out really productively back in February with a nice drop. So for bearish securities, you have to reverse your thinking basically. So if before, let me just go back for a second. So if here for the Chinese shares, we want to buy when the security drops below the 50-day and the MACD is negative, you want to do the opposite for a bearish security. You want to wait until MACD turns positive. That's one of the methods, for example. You can wait until the MACD turns positive and then a close below above the 50-day moving average, and then a trigger signal down. Then you got a nice move down. Same here, but this one clearly didn't work out. But this signal right here, yeah, it took a little while, of sideways action, but then basically in 1, 2, 3, 4 sessions, we just had a nice move down. And I think right now we're tracing out what I think is a bear wedge, or after a steep decline, we have a rising kind of price rising up in a sort of a wedge. And if for now, while the wedge is rising, it's short-term bullish, but should we break this lower trend line, and usually they just kind of go up, 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 and then they just kind of collapse like a sharp move down, kind of like this. And if this happens, I think we will see prices at the very least around $45, but possibly even lower. Maybe it will retest the new 52-week lows as well. For now, I think this is a bearish security. I still have a position open in SCO that I opened right here in beginning of May. This was pretty productive short as well. All right, let me just show you how to find us on the internet. Please go to MasterChartsTrading.com. We do have a blog there where this information is posted, and the video section as well. We're about to start, hopefully soon, trade alert services, so please do sign up for our mailing list, as you will be the first on the list to receive a promotional pricing for our trading services. And then also I wanted to show you where to find the charts that you were just shown. So if you go to public chart and social page right here, we have a link there that goes to public charts page. Sign up for our mailing list, like I said. If you have Twitter, Facebook, YouTube, or StockTwits accounts, I do post there quite often, so please do follow us there as well. Thank you for watching, and have another great trading week. Bye-bye.